a combination of new CXOs who've done this over a decade and more, coming into the ecosystem, starting their own ventures. You think about Deserve, Centricity, Neo Asset Management, are companies who have founders who've done this and are now starting up their own shops, powered by sort of agile software and software technologies that are helping them do a faster distribution, a more tech-first business, mobile technology and mobile-oriented distribution. And then the underlying macro, which helps support a usage-based or effectively a compounding pricing model. So as AUMs are growing, these businesses are able to capture a share of that AUM and build a solid long-term business. So we like the entire set of factors coming together, a confluence of events happening together at the same time.
Hi, wherever you're listening to this, I hope you're doing well. Welcome to Tech Conversations, where we bring you insights from tech entrepreneurs, CXOs, and investors. I'm Hari Arakli, and in this episode, Anurag Begwani, a vice president in India at Bessemer Venture Partners, talks about the areas within India's fintech landscape that the firm is optimistic about, ranging from niche software to retail wealth management to cyber insurance. In this conversation, which I recorded on August 21st, Anurag also talks about how the fintech opportunity is spreading well beyond the tier 1 cities into the next 30 cities and the 30 after that. So Anurag, thank you for doing this. We've been planning this for quite a while and really happy that it's happening today and looking forward to this conversation.
Thanks so much, Hari. Glad to be talking to you today.
All right. So for our audience, maybe you can start by just giving us a very quick backgrounder of the path that led you to Bessemer Venture Partners. And I know you've played the investor role even in your previous avatars. Just give us a snapshot of how you got here, and then we go from there.
Sure. So sort of born and raised in Surat. All family members were doing some form of trading. So understood sort of trading and business around it from a very early age, be it textile, chemicals, or jewelry for that matter. And once I was thinking about what next from a career perspective, that came out more intuitively. So chose to do the path of a chartered accountant and felt that I will be involved in some shape and form in a business. Felt like starting a tea brand when I was 16. Because my father had a tea trading business.
Okay.
But that didn't sort of transpire at that time. But when I was having a few sort of considerations and offers to choose from after my chartered accountancy, I felt investment banking would be a good way to start because it would have a mix of several businesses that I'll be involved in. So did a bit of investment banking, but got very sort of early inroads in my career into investing with a couple of funds, firstly Lighthouse, then Temasek, and now at Bessemer. And over this last 8-9 years, have thoroughly enjoyed this side of the world where we are sort of working with several very interesting and bold founders who are trying to solve for different pieces of the problem statement almost at the same time, and almost seeing the journey of a business getting built out through those eyes. So did CA, did some years of investment banking, then over the last 8 odd years have been focusing on investing across sort of mix of stages, growth, late stage, buyouts, and now early stage investing with Bessemer over the last 3 years.
Okay, so again for a more general audience, maybe just give us a quick 1-minute intro to Bessemer VP. I know it's a very sort of illustrious, storied venture capital firm globally. But folks who may not know about it, tell us about it for a minute, and then maybe you can talk about some of the sectors that you are focused on within this firm.
Sure. So Bessemer is a global venture capital fund. Started way back in 1911 when we started our practice in the US. It started out as not a fund per se, but it started out with innovation where Henry Phipps sort of brought together the Bessemerization of steel as a process, and that reaped rewards, and he put that money in a trust, and that trust then started backing innovation and breakthrough innovation in technology. Over a long period of time, as we were sort of investing in the US, we then sort of got a full venture capital fund, and then now have offices across several geographies. The India practice is fairly young, so we started sometime in 2006. It started in Mumbai first, but we saw the whole tech innovation happening in India and then moved our practice to Bangalore in 2012. I joined the firm 2022, so been about 2.5, 3 years now. And over this period, we've sort of dabbled into several roadmaps. Some of those I cover. So I look at financial services, I look at consumer, and I look at SaaS. But within those, we have specific roadmaps that we focus on. We'll love to talk about those as we have this conversation.
And I think it's also interesting to point out to our audience that Bessemer not only invests in early stage companies, but all the way to Series C and sometimes maybe beyond that.
Yes. So yeah, we focus on investing across the life cycle, as you may call it, but try and back founders very early in their journey. And so think of us as investors who can come in very early when there's an idea, there's likely product market fit, or we could come in at a slightly more growth stage as well. So, but the idea is almost always to back founders over a long journey. So, very critical examples here could be MediAssist, which we invested in 2011, which we IPO'd sometime earlier this year, HFFC, Big Basket. Some of these are companies that we've sort of lived through their journey, lived through the journey of the founders as they've built these businesses. So, very long term oriented, and that culture sort of stays true both globally and in India. And very fortunate to be associated with some of these companies through their journey.
Okay, so let's dive into some of the sectors that you currently focus on. And as you go along, maybe also give us some examples of companies in which you have invested.
Sure. So I focus on, within the financial services side, we focus a lot on the fintech software side. So both banking software, insurance software, wealth management software. So that fintech software and the fintech infra becomes a very critical piece of roadmap for us, which we've been backing now for a very long period of time. 2016, 2017 is when we invested in both Perfios and Lentra when they were very early in their journey, but had a great product and great founder fit. And we've had success with sort of banking infrastructure, and we understand that deeply, both in India and globally. So globally, we've done both Bamboo and Encino, which have both become very successful banking infra platforms. But also on the insurance software and insurance distribution side, we invested in a company called Zopper, which I sort of closely work with. And that company is essentially solving for embedded insurance and plugging in insurance both across life, health, retail, and motor, and also sort of trying to embed insurance in the user journeys of a consumer online and offline purchases. So these are sort of insurance and banking infra spaces that we've been focusing on and have invested in those areas. But also, as we sort of go along, we are trying to really spend a lot of time on the wealth management side over the past year. And we think that's a very interesting area of investment and a lot of mega industry tailwinds, which I would love to touch upon that. Also, cybersecurity and cyber insurance, and some of these are interlinked. So it also cuts across our banking infra stack, it cuts across our insurance stack, it cuts across also our consumer sort of stack, where there's a sort of data exchange and need for cybersecurity has even propelled over the past few years. So I spend a lot of time on that domain as well. And then finally, we are seeing a lot of AI adoption in how sort of coding is now getting transferred to more system engineering. So sort of COBOL-based applications, as TCS just did a demo day and showed how they could use Gen AI to transform COBOL-based applications to more Java-based applications using Gen AI. And this reduced significant time in development and had a lot of efficiency on the risk reduction as well. So we are seeing opportunities on the AI front, on cybersecurity front, and on the wealth management front, but continue to be excited about our banking infra thesis. I think there's a lot of opportunities still remaining. Banks still continue to invest heavily on analytics, cloud infra, bank digitization, digital transformation journeys. For context, HDFC Bank spends about 6 to 7% of their OPEX costs on IT and tech. IDBI, Yes Bank, uh, uh, all of these banks are spending between 8 to 11%, and they are growing these spends year on year. And we remain excited about capturing new profit pools within these tech stacks and tech innovation.
As I was listening to you, one thing that came to my mind was, is there perhaps today an evolution of startups in India, entrepreneurs who are bringing this experience, deep experience of software, but also building it for like some really specialized purposes. And I think in the industry, you all call it vertical SaaS. But even within that, one gets the sense that now they've become really sophisticated. What kind of trends are you seeing in that aspect?
I think both. There's a front end aspect to it and there's a back end aspect to it. Let me cover the front end aspect first. So, what's changing a lot is that as the adoption of mobile technology has sort of propelled over the last few years, new age banking apps are getting formed, and here there is an aspect of how you have to make it more cyber compliant. You have to make it more sort of compliant basis on the payment stacks, on the cybersecurity stack as well. So we are seeing opportunities in that domain. But on the coding aspect as well, the tech development is now moving from pure play coding to actually system engineering, as I was articulating. So we are seeing opportunities where companies are using generative AI, and the whole aspect of tech development in a long cycle has come down to a shortened cycle. This is on the front end, but also on the front end, banks are investing behind sort of single source of truth for customer data, model training with privacy compliant norms, model training with Gen AI in specific. And hyper personalization is one other aspect where, for example, if you have a credit card and a loan from the same bank, can you bring a single source of truth for the bank? And these banks run on multiple loan management software systems for specific products. Can you bring a single source of truth for the bank and then do hyper personalization for a valued customer? So hyper personalization as an opportunity is sort of coming through, and legacy stacks moving from old systems, legacy systems, to now new systems with this shortened cycle of deployment and technology development is another theme that we're picking up. Now coming to the back end, now this is more futuristic because as we are seeing, there are several new GCCs coming up in India. So for context, there's Deutsche Bank, there's JP Morgan, there's Wells Fargo, there's Citibank, there's BNP Paribas, who all have employees which run from 2 to 3,000 to as large as 10,000 each. And these folks are essentially solving for these MNC banks and running the whole middle office and back office functions from India. This has also resulted in several new GCCs and employment opportunities in not just tier 1 cities but tier 2 cities. What we are seeing is that there are now vertical specific SaaS solutions which are helping in process work for these large workforces. So we are seeing opportunities cutting across HR, we are seeing opportunities cutting across the legal side. Uh, uh, on the document digitization side, we are seeing opportunities, and all have an underlying theme that they've really understood the problem. For example, if it's a large investment bank running several thousands of trade orders, and they have to reconcile this entire workflow, they've really understood the problem statement here, which now manual effort would say take 3 hours uh, to solve for say 100 sheets of documents. Now you could do this in less than 3 minutes. So founders who are picking these niche vertical specific problems, and there are several of these problems which very large number of people deployed to solve these problems, and founders picking these specific niche problems and trying to create sizable businesses within these specific problems. I gave you one example, but there are several such opportunities that have now started to emerge over the last few years. And we are quite excited about finding those founders and backing them because it's a sort of tailwind, and India will benefit from that because of the whole productization of services, which we also touched upon very recently in our Rise of SaaS roadmap.
So today, what are some of the most important drivers of all this change that's happening in banking software and fintech and so on?
I think efficiency is the biggest driver, and folks have realized that you could essentially use technology to make a lot of your processes very efficient. And using this with a human in the loop also reduces the risk significantly. So think of the same use case where I was saying that an investment bank could work with a provider to solve for the whole document digitization and email management on a common portal. And here, there could be manual errors that an employee could make because of sort of system workloads and sort of errors there. But now you could use a technology which reads through all the data, which gives you a condensed solution, and now you are only solving for exception management. Now, same theme you could apply to customer service, same theme you could apply to legal aspects. And we are seeing that these opportunities are very exciting as standalone because they can be very vertical specific for a bank, but it also has insurance. It also has very similar horizontal aspects that they can tap into very quickly, and they are solving for a lot of efficiency and reduced risk errors. So we like some of these aspects a lot.
One quick specific that I wanted to just for you to elucidate again from the point of view of a more general audience and not be very technically savvy. When you spoke about the transition or shift from coding to system engineering, what is it that you're actually referring to?
So essentially, banking technology is a very long gestation process of development, right? So it would take a bank years to establish a strong backend system and work on that, and there's years of tribal knowledge that's gotten built out. But having said that, this can't be changed overnight. Even though the pace of technology keeps changing, there are new languages, new innovation, and new sort of cloud software that comes through globally, which can be used. It takes some amount of effort to basically transform your banking systems. For example, HDFC is running a digital transformation journey for over the next 3 years, but it takes them 3 years because there's so much tribal knowledge built into their core stacks that as companies are moving from their older version of legacy systems, and I'm being very generic in how I'm explaining this, but older version of their core banking softwares or loan journeys, etc., to now new age journeys, you can't just rip it apart. You have to make sure that that system runs for a certain amount of time, and you've developed a more agile system which addresses customer requests, which helps you take decisions, which helps you underwrite faster, which helps even in the mobile age world, everything is very instantaneous. So can you leverage those aspects as well? And then there are multiple products that banks run, right? And multiple products have multiple disparate systems, which then fall into the core banking space. And can you streamline all of these using the latest technology? So what I mean by that is, one, the pace of change banks have to adopt to and cut it short. You can't rip it and just move to a new system. It takes years of tribal knowledge to bring it to a new system. And then as multiple products have expanded, and within products there are several new SKUs to personalize for the right audience in the consumer, be it MSME credit, within MSME credit, the right ticket size and underwriting rules, creating specific bank assurance products to attach insurance to a loan product, or how can you cross sell a credit card to a valued customer, how can you enable UPI and sort of UPI payments faster. There are several new products that have emerged within our Indian fintech ecosystem, and to cater to these fintech products and financial services products more broadly, banks need to modernize their software stacks. And as they modernize these software stacks, use of generative AI, use of founders who've known this domain over several years and can now use the right technology to build in and bring a solution that's relevant for the next 10 years comes into picture. And we are seeing that this shift doesn't happen very often. This shift happens in parts and decades, right? So we've seen sort of several shifts, but now is the shift where it's happening using generative AI, new age cloud compute, cloud AI, and then banks are using these technologies to build the next phase of growth.
So, in your conversation with fintech founders, are there now entrepreneurs who are building software in such a way that, in some ways, it kind of future proofs the banking software from the time that you started developing something to the time when it is actually commercial and up and running?
I think these sales cycles and implementation cycles have actually come down. So if it would take, for example, a 5-year project with several large system integrators and IT services giants to work on. Now, even these companies are very willing to partner with the right set of founders and startups with deep domain. So you may use the same system integrator or the software developer, but they are partnering with these founders who are building these software sort of software tools to then combine the offering and bring it to the banks or insurance companies much faster. And all of these are happening not in a 5-year cycle. They are cutting down that cycle to a much shorter time frame. And there are now multiple brains associated to that same problem statement. There is several people who moved out of these large institutions and started out on their own over these past few years. And we feel that a combination of this developer workforce in India, which is sort of very sizable, these founders who've come from this deep domain and understand the right problem statement and understand the banking language or the insurance language and the insurance problem statements very, very well, and almost consultative in how they are approaching the sale with the bank. And a combination of that with the large workforce that is there in India through these companies, it's essentially a culmination of how these people have come together and then leveraged a technology to bring down the entire process of deploying a new technology or implementation to a much shorter time frame. And for context, if it would take uh, a company a year to deploy something, now it takes say 3 to 4 months to deploy the same thing. But there is still an aspect of regulatory elements. There is aspect of cybersecurity, compliance. So those are aspects if companies are able to solve for, then it's the sales cycle or the implementation cycle is naturally getting solved because of the ecosystem mushrooming in a certain way.
Okay, now let's talk about the wealth management uh, part of this. Why is this one particular area that you've called out as something that's really interesting to you?
I think there are several factors, and we've sort of evaluated this from a 360-degree point of view. And I can call out a few business models, and then I'll talk about a few tailwinds there as well. But if you think about, there are several business models here. One is the B2C wave of wealth distribution, which is you go direct to the consumer, acquire the user, sell wealth products. Second is the B2B2C wave, where likes of NJ and Prudent, which work with a host of advisors and agents who then sell these distribution products, and they've seen a lot of growth over this period. The third is the software powering the wealth distribution, and this could be order management systems, order routing software systems, or broking software systems, and they have had to really adopt to the massive growth in retail volumes in India, and they are using essential technologies to then help the eventual users, which are the B2C or B2B2C models, to power the distribution of these retail wealth products. There are new age AMCs coming up, new AIFs being set up, new PMSs being set up, and these are being set up by founders with very established track records. So, folks from marquee wealth management firms or wealth AMCs are actually setting up their own proprietary firms, and venture dollars are going behind those businesses because of the underlying macro of India. And now touching a little bit about the macro, if you look at the mutual fund growth in India, it's now at almost 61 lakh crores. This was 50 lakh crores almost 6 months back, and this has grown by almost 5 times over the last decade. Now, this if you look at the granularity with which it's growing, so the SIP volumes on a monthly basis is now at almost 24,000 crores. This was 15,000 crores on a monthly basis a year back. This was 8,000 crores in 2019. So it's really propelled granularity, and you're seeing that momentum continuing. A company called Prudent is targeting almost 1,000 crores of SIP volume on a monthly basis. So uh, a combination of new CXOs who've done this over a decade and more, coming into the ecosystem, starting their own ventures. You think about Deserve, Centricity, Neo Asset Management, are companies who have founders who've done this and are now starting up their own shops, powered by sort of agile software and software technologies that are helping them do a faster distribution, a more tech first business, mobile technology and mobile oriented distribution. And then the underlying macro, which helps support a usage based or effectively a compounding pricing model. So as AUMs are growing, these businesses are able to capture a share of that AUM and build a solid long-term business. So we like the entire set of factors coming together, a confluence of events happening together at the same time in the wealth space. And I spoke a lot about the distribution side, but also on the manufacturing side, as new AMCs are propping up, as new ways of distributing wealth products, be it fixed deposits, be it gold, new asset classes emerging. We are seeing this to be a great point in time opportunity for founders building in this domain, and we're very excited to sort of partner with some of them.
And for folks who may not be familiar with the use of manufacturing in the finance context, you're referring to companies which come up with new products,
That's
financial
right.
products.
Yeah, it could be companies which are setting up new age AMCs, asset management companies. It could be companies who are setting up, new portfolio management service systems, or new alternate investment funds that are getting set up, and who are essentially creating these products with a mix of equity, debt, bonds, gold. So multi-product opportunity is there in India, where you can have several such product baskets which can be created for users to now invest in. And to be honest, the retail, the equity as a share of the total household assets in India is still less than 5%, and real estate is north of 50%. So these new manufacturers want to tap into that under penetration, and this is not a 5-10 year kind of wave. This will really propel over multi-decade, right? So hence we are excited about the whole wealth aspect.
Any interesting names from your portfolio, and can you also talk about what they're specializing in?
From a wealth side, in the earlier avatar, we had done Motilal Oswal very early in their journey, which we then took public. And then we also did IEX, which is the Indian Energy Exchange, again very early in their journey, and then which went public. More recently, we are in the lookout for opportunities in the wealth space. We've done a lot of work already, and what we've understood is that companies building on the SIP theme, on the AUM based pricing theme, and sort of attracting users on top of these themes would be very interesting for us for a long term play. And we're also, in fact, sort of meeting a bunch of these companies day in and day out to sort of see what's the best fit for us, and then invest in.
You mentioned B2B2C. You made a passing reference. What was the kind of work, and can you give us some examples of companies?
Sure. So by B2B2C, what I mean is that there is NJ Wealth and there is Prudent, and these are sort of market leaders where they work with advisors who are independent financial agents or mutual fund distributors. And these are distributors who will then acquire their own set of consumers to distribute mutual funds or distribute other forms of asset classes, right? So how this helps is that there is a trusted advisor, and this trusted advisor is using a network that is created by an NJ Wealth or a Prudent, which includes customer service, which includes training, which includes having the right set of products by manufacturers of these products. So AMCs, AIFs, PMSs, in some cases setting up their own AMCs as well. And then these advisors can just focus on the consumer and what's good for the consumer and sell these products. So it could be distribution of a mutual fund product where an advisor is coming to you, explaining you what the product is about, giving you a comparative, and hence being able to build their own practice and their own franchise. This same theme and Prudent got listed earlier this year, and then this same theme is now being used by several such founders over the last few years to build a similar solid business. So the likes of Asset Plus, Wealthy, Nivesh, Z Funds are all in the same domain where they've seen this sort of success of these large established players who've created a network over decades, and they are seeing that the next decade could be that opportunity to again see mutual fund is still sort of growing very fast. There is still dearth of multi-product strategies, and consumers are willing to try these new products out and then see that wave even now over the next couple of decades and build solid businesses on top of that.
Is this kind of the wealth management analogy of or equivalent of what companies generally call banking as a service in fintech? Is there something similar to that?
In banking as a service, almost you are serving the bank or serving fintech, and it's sort of a middleware in between.
Okay.
And hence it could be banking as a service for payment processing or a credit card or a loan, and then you are building workflows to create that network on both sides and meet demand supply and bridge the gap. Essentially here it is almost saying that I will enable distribution of a certain product for the user, and it's in a lot of ways there's some, in a B2B2C context, there's a human in the loop involved. But it's not just Rails. There's a lot of human touch and element involved in this side of the world versus pure banking as a service, which is more software and workflows oriented. Here it's what's the right product for the consumer. Can I build a sustainable business by using this kind of product portfolio and cater to the consumers? And this is more AUM linked, where if the AUMs of mutual fund assets under management grow, you take a share of that pie. This is more transaction linked. It's more retail credit ecosystem or card volume ecosystem, and you take or a payment processing ecosystem, and you take a sliver of that world. So in some, you can draw analogies, but both serve very different profit pools. So one is more credit focused profit pool. This is more wealth focused profit pool.
Okay, and in the wealth examples that you've been talking about, it's more about distribution and not so much as enabling the transactions itself.
There is an aspect to that as well, and one which we like as well. So think of, there's a broking company, and we could take any such example of a broking company, but there's a backend software that is powering the broking company. Now, similarly, there's a wealth management AMC or an AMC, and there are RTAs who are serving those AMCs, and these RTAs are CAMs and K fintech, who then work with these mutual funds to solve for all the operational pieces that they do. Now, similarly, all these wealth management firms that we keep talking about, they have a backend sort of customer layer, a backend accounting layer, a backend connector which connects to these exchanges or connects to these broking companies. So there's a lot of things that are happening at the backend, and it's not easy for these companies to set it up afresh if these technologies didn't exist. So these technologies exist, and companies are using these existing technologies, doing a step up on that to make sure there's differentiation, and then using these technologies to build businesses. If these technologies didn't exist, they wouldn't be able to bring these businesses out in a 2-3 year time frame. It would take them much longer to build these connectors themselves. And this is also governed a little bit by design and regulation. So for example, there are, say, NSE and BSE are exchanges where you need connections. There's SEBI, which has a lot of regulatory framework on how you can work on custody side with funds, which then give orders on both derivatives and on stock. So there's the whole custody management, there is the whole exchanges, there are broking companies which somewhere sit in the middle of these things. And then there are these distribution platforms which have to work with all of these in a very real time manner to process these trades and to process strong retail volumes that are happening. Plus the digital RTAs that I spoke about, which then work with the mutual funds to solve their pain points, because again, volumes are growing, but you need systems to process these entire volumes. So lots of action happening at the back end as well. We've done a lot of work on that side of the world, and we understand that very deeply too. But yeah, both front end and back end, there's opportunity on the wealth side.
Give us a layman's understanding of what an RTA is, a digital RTA.
So these are registered transfer agents. So if you think about a mutual fund, and if you are buying a mutual fund of an AMC, and it could be an HDFC AMC or any other AMC, and if you bought that AMC, now HDFC will you'll have to fill up a form, or you'll have to do some onboarding with the AMC, how many units, what is the amount that you want to purchase, what are your some basic PAN details and KYC details. And now you will get allocated certain number of units for the purchase that you're making. And these RTAs would essentially help HDFC, AMC uh, to do a bunch of these process elements and then credit the right set of units to the user, and also help with a bunch of accounting related aspects to the AMC. So the AMC is manufacturing products, the RTAs are helping the whole middle office, back office function, and the AMCs are working with several wealth management firms or distribution firms or a direct channel to distribute these products. So there is role for everyone. So think of distribution through wealth management firms direct, think of AMCs as manufacturers of these new products, and think of RTAs as problem solvers and sort of back office and middle office function layers in a layman terms for these AMCs.
Mm. And the companies which you said are building a lot of these connections and networks. Give a couple of examples that you found really interesting and tell us why.
So for example, there is a lot of these networks are essentially on the broking side. There are a few companies. There is a company called Omnisys, there's Rupee Seed, there's Kambala. These companies are essentially connectors with these exchanges, and they've built order management systems, order routing systems, and all the broking companies are using a combination of these solutions or one of these solutions to connect with the exchange. So if you are as a user buying a stock, then you have to connect to the exchange to as a broking company, you have to connect to the exchange to have that trade executed. So the broking companies are several. There are several of these broking companies, but all of these companies use these underlying backend order processing or order routing systems by these companies to process these trades. So this is one example. Now, similarly, there are wealth management firms, which I named a few like uh, uh, Deserve and New Asset Management and these, and they work with similar accounting software tools and accounting reporting tools because they work with a lot of high volume and they need to record these trades for each user, and they also need a front end app layer so that the user can see these trades on a mobile interface, or the advisor can see these trades on a mobile interface. And there are companies who are solving for that ecosystem as well. And then there is the whole ecosystem where there is a custody of assets that people have to manage. So if you are a sort of high net worth individual, a foreign portfolio investor, an alternate investment fund, you are getting inflows from either India or outside India, and you are managing a pool of money. You are buying assets, investing in shares, and these shares are kept not with the broker but like with a custodian. And this custodian then works with all your broking accounts and manages these trades. And think of this in a derivative situation where you're doing futures and options. Then this custodian works with your bank, works with the brokers to make the trade happen, and works with the exchange to make sure the margin money is intact, make sure you're uh, compliant, and make sure your accounts and reporting is all taken care of. And so that the fund managers can themselves focus on finding the best opportunities to invest in, while all of this is taken care of by several of these players like custodian, a broker, a bank. The exchanges are working in tandem so that you have the sort of right set of shares credited to your account.
Overall, would you say all these companies are looking to tap the opportunity from the big increase in retail consumers' participation in broadly in capital markets, and of course, a lot of it through mutual funds, or are they also looking at bringing more effective, more efficient processes to institutional customers as well?
We've seen more retail, but there is, as I said, on the custodian side, there is enough and more retail and institutional participation. So think of alternate investment funds, foreign portfolio investors, FIIs, all coming into India as well, all setting up their own shops in India, and all wanting one set of custodian, one set of broker, a good banking environment to process these volumes, a great forex ecosystem so that everything is smooth. and running. There is the whole gift city element, which is now getting set up so that more derivative trades can happen from India, more money can flow directly from India and not via other geographies that earlier had sort of tax treaties as well. So, so there is institutional money also flowing into India, but the opportunity is more centric to licensed entities, so banks or custodians which have a license, for example, have a play there where they can work with these set of folks. Uh, but otherwise, it's more that can you power some backend technology for a broker, or can you power something for a wealth management firm, which could be working with institutional clients as well or family offices as well, and then it's the technology to them versus the investors themselves.
What's your assessment of if we restrict ourselves to fintech software? How big is the market in India today, and how is it growing overall?
I think the tech spend for banks, as I mentioned, some of these numbers. So say HDFC's OPEX would be about 65,000 odd crores, and of that 6-7% is tech spend. Now most of these banks would spend in the range of 7 to 11%, and that OPEX is a massive number. Now that's one part of thinking about how to think about sort of profit pools there. But also, if you think of credit volumes in India, for every loan that's getting processed, someone is doing a KYC, someone's doing a fraud check, someone's doing a transaction monitoring. And the banks are paying on a per transaction pricing, right? And it could range from as low as 5 rupees to as high as 80 rupees. So while it'll be hard for me to give you a very sort of accurate sense of how big each of these profit pools lie, because there are several of them, but just to give you a stat, for example, tech spend for banks somewhere in 2022 was about $500 million, and this has grown sort of multifold over this last few years. Like it's growing at 15-20% every year. And so that's one profit pool, but that's just tech spend for the bank itself underlying. But some of these are more transaction linked pricing models, like debt recovery is linked to the debt world, where it's not essentially a tech spend, but part of the recovery, part of the business itself. When you are processing a loan, it's part of the processing cost itself, the KYC, etc. Uh, so it's sort of it's a large enough market, and it's got in some ways a lot of opportunity for companies to build.
And what you're saying in terms of whether all this software, all these products, are they predominantly cloud software products, or because it's finance, is there a substantial portion of that which is still on premises or private clouds and hybrid clouds and whatnot?
No, there's a substantial portion of that which is on-prem. A lot of it is moving to cloud, but I think that cloud transformation is the tech spend that the banks are essentially doing over the next set of years to transform this as much as possible to the cloud. But given sort of the regulatory environment in India and data localization, a lot of it is still on-prem, and there's still opportunity for more cloud transformation, digitization for companies to do. So it's not over yet. There is still room from on-prem to cloud, and some of the on-prem is by design because of how data localization laws work in India.
And what are some early interesting use cases you're seeing as companies begin to put more and more AI in these applications?
I think a few use cases. One is on the whole mobile app world itself, where now essentially you have hyper personalization opportunities because that user has your app on the phone and he's interacting with that app, and you can know more about that user. So that is one. The other is mobile app security, because a lot of payments are happening online, and our companies are trying to find out ways of how they can prevent cyber frauds using AI. Can they predict it faster? Can they give you insights much faster that, hey, this could go wrong. Do you want to still proceed with the payment or not? So that is the second one. And then the whole piece on the back end side, where now that, hey, you know that this is the user, this user has multiple products from you. Do you want to customize something for this user? which then helps banks to essentially grow even faster compared to just selling the same set of products in the same avatar to the same user. So opportunities like these are emerging, and then there is opportunity to, hey, can you cross sell with an insurance product? Can you sell more wealth products to the same set of consumer? And can you use the data and sort of cut it the right way to see what are segments where you should be doing this? And there are companies who are solving for all of these ecosystems and trying to provide the bank with these tools uh, to leverage technology and do these distributions. Banks are also developing it themselves. They are doing a lot of experiments on model training. Uh, can we predict default rates, for example, in specific agri portfolio? Can we use some technology to assess whether the crop failure rates could be predicted, uh, and use geospatial data, etc. So bunch of technologies that banks are trying to use, either created themselves or work with companies and leverage those technologies.
And incidentally, as you know, yesterday Palo Alto Networks did a little bit better than expected, and their central theme was all about platformization and one vendor giving sort of a more comprehensive suite of applications for customers who want to kind of quote unquote rationalize their software or keep the number of software down and all of that. What early signs of that are you seeing in the Indian context? And as fintech software grows in India, I mean, that would be a concern as well, as right? In also because cybersecurity is a very sort of central theme here.
I think at least the way we've seen it is that companies, especially banks in India, are very proactive in making sure that these companies are extremely cyber compliant and infosec compliant. So they wouldn't partner with someone if those security guardrails are not intact. So that's sort of one. I think on your point on whether banks are okay with trying out new innovation and seeing what works best, and the risk of having too many software tools within the same bank, I think we've not come across that risk yet in India. It may so happen at some point in time when something becomes very large, then the banks want to have it in a different avatar, whether combined with something or build it themselves. But we've not seen that yet play out in India. We are seeing, if you look at any of the presentations of these listed banks in India, they have now dedicated pages where they're talking about their digital partnerships with startups. And those run into, at least 10, 15 of them and are listed out every year. And some of them also run sort of these quote unquote collab programs where they are inviting startups to do more innovation for them. RBI has a tech innovation center as well. So we will continue to see growth in companies who are trying to solve for vertical specific problems in financial services. But as things get very large and as things become very sizable for the banks, and multiple teams within the bank have to use the same tools, then the banks also will think about it more centrally, and they will think of what's the best mechanism to combine these technologies. I will work with one vendor, you come through that vendor, and then I can sort of introduce my code base to one person and not to the entire set. But we've not hit that road yet. We are still we continue to feel excited about new companies coming through and not having this bottleneck where banks feel that, hey, I have too much going on, because there's enough room for new verticalization or vertical specific opportunities within several products of the bank that necessitates innovation.
At the ecosystem level, if you were to look at it through the lens of a fintech entrepreneur, today, what are the big challenges for them to really grow and become sizable companies?
I think India requires a very patient build out, and deep domain really helps. So, founders with very strong deep domain, having worked in that ecosystem, carry the right set of relationships, can be a consultant and a consultative seller, uh, have a very strong right to win. So, what kind of right to win you as a founder would possess in that ecosystem that you're trying to build out would be very key. Like it will be critical for you, for a founder to assess that first, is one thing that we think. Second is India runs on almost a near final product strategy. So if you're going to a large bank and trying to win that customer, then you have to go with almost the right set of product, which is the near final version. And it could be the case with both our companies, Perfios, Lentra, or with Zopper. We've seen that these near final products have been adopted by banks versus a product which, hey, we'll do a POC, we'll build something for you over this next phase, we'll iterate. That doesn't work. You really have to find the pain point and go with one key product. But then you have to keep innovating on multi-product strategy. So one product will never be enough. You will have to build multiple products for the same customer. So can you find markets where there are multi-product opportunities? And the third is that India is a very value conscious market. Like the software works in India, but you have to really prove that you are generating enough value for your customer. So companies which can almost tie themselves to the value that they are generating or the usage that the bank is doing or transaction link pricing will almost always have a strong right to win versus just a pure subscription model. So founders who find themselves maybe struggling we've all often seen that it's on the pricing model, that they got that wrong in the early stage, and then it wasn't very easy to scale from there on. So these are three broad reasons. We covered this actually in our fintech for all report that we released last year, where we said multi-product strategy, pricing model has to be usage based, and then you can grow with the underlying growth of the customer, right? So these are some broad areas that we try and look for in companies that we are trying to partner with and help them on.
And with all the conversations that you're having with founders or folks who are looking to just who are bringing you ideas and want funding for their startups and so on, can you talk about some of the most interesting innovation ideas that you've seen which you think hold promise, which one can sort of look forward to in the near future?
I think I touched upon some of them in our conversation, but anything around cyber insurance could be a great opportunity. It's still underpenetrated, sub 1%. It's growing 50-60% year on year. It's got enough room on the risk management side, on just distribution side, on helping companies with software tools so that they can both manage their risk, manage their incidents, help the insurance companies to underwrite the right set of risks. So there's a lot going on the cyber insurance world, and we feel very strongly that this will be a large market opportunity, a net new opportunity for someone to build on. The second one, where there are not net new TAMs, but TAMs which are growing very fast, as I said, is on the wealth side. And if you can be a AUM linked player with SIP led underlying fundamentals, then there is still a large market to be created and large business to be built there. And on the banking software side, we are trying to scout for companies who are using AI to use some of the experience in back office and middle office operations and streamline those workflows using Gen AI, and then can you bring efficiency, reduce costs. So these three domains could be sort of interesting areas for folks to work on. The fourth is again linked a little bit to data security, governance security, use of sort of safe model training data, and all of it links to some of the sort of data privacy norms that are coming through in India, and companies building on these themes, which cut across the DPDP Act, which cut across cybersecurity, which cut across Gen AI, and it's almost a combination of these three things, which is almost the need of the hour. And companies cutting across these themes and building product solutions which help actually enterprises digest their own set of customer data in the right shape and form, build consent management in the right shape and form, could be an interesting opportunity as well.
Any last points you want to highlight before we wrap up?
No, I think one other point would be that there is a lot of ecosystem development now. So So, for example, I'm a member of the India InsurTech Association, which works with a lot of insurance companies and manufacturers, distributors, brokers. There is the GFF, which is happening the next week, which will have the whole ecosystem from regulators to bank operators, insurance operators, all the sort of founders who are building in this ecosystem to learn, grow together and network. And all of these opportunities didn't exist 4 or 5 years back. So you are seeing the whole ecosystem come together at this point in time, and there's a lot of opportunity on the financial services domain, uh, cutting across a few themes that I spoke about, uh, and we're quite excited to sort of find more such companies.
One thing that sort of just occurred to me, not very sure to what extent that's relevant to this conversation, but I was just curious about whether you come across founders who are looking to take the benefits, of wealth management to small towns, villages, and I'm just trying to better understand to what extent doing that is dependent on access to the internet.
I think it is happening. So it is not just a tier one phenomenon, be it insurance penetration or mutual fund penetration. The growth is actually in the next 30 cities and the 30 cities after that. So companies have realized that there is now mobile technology, there is enough distributed workforce that we can leverage, we can train, get them a nice mutual fund distribution license or a insurance agent license, and then they can start selling these products, which is where the B2C, B2B2C model becomes very interesting, because it's not anymore that, hey, you are a high net worth individual, I will serve you with a nice uh, PMS product which is only eligible for a person who is willing to invest 50 lakh rupees. I have a 5,000 SIP, which would you want to start with? I have a 500 SIP with which you would want to start with. Hey, by the way, I also have a gold product which now you can buy digitally. You can buy a digital gold bond. These it's multi products which have now become accessible on a mobile phone with a distributed workforce, which now not only the top tier cities, it's not the top tier cities alone, it's the next 30 cities, it's the next 30 cities after that where all of this is getting spread out. There's enough that is being done on awareness campaigns. Mutual fund and Amphi sort of pioneered this with the mutual fund Say Here movement. IRDAI is doing something similar, and we'll hear more about that with Bima Sugam and so on. So government is propagating a bunch of these things in the smaller towns and villages. So I think we feel very excited about those themes as well, but we want to play it not just as these themes alone. We think of India as a market opportunity, and it's a natural growth that you will see not just from tier 1 but tier 2 cities. Even from an employment point of view, as we spoke about, with all of these tech development and GCCs coming through in likes of smaller towns and cities now, there's more such people who are working in those markets and then finding opportunities to sort of find more income avenues, a passive income avenue through investments, or awareness of tax regime in India and buying an insurance. So as salaried workforce in general becomes more prominent and it goes beyond the tier 1 cities, and these distributed workforces, mobile technology, etc., we will continue to see growth of these wealth products being passed on not just in the main cities.